in the messages, and I guess you two can get going. Thank you for joining us, Crypto Boy. Excited that House of Frenchies was an early adapter to PDO, and really looking forward to digging in with your community today.
And also, want to say once thanks to all of you guys, and I'm very happy to meet you both here. And I think we were really the first ever meme coin on PDO.Finance. And that's also something where I want to start. I mean, post-tax offerings sounds very specific and very specialized and very DeFi. I mean, what is like one of the main advantages for like any investor to use PDO pools itself? Because I mean, for us, it's now very obvious, but I think for any investor, PDO sounds a bit mysterious still. Can you hear me, Yoda?
I can hear you. I think Kyle been first.
Oh no, I'm still here. I'm just smiling, you know, because I'm still.
You just do it fake.
Yeah, I was segueing to you guys, but yes, yeah, Yoda is very good at going into the bit and the byte here, and I think towards the end he'll actually even show you exactly how PDO, you know, can help the Frenchie community and help your token grow.
Okay, I mean, you already also have set up 2 PDO pools, which also the investors can directly use and invest, and also Yoda will use these pools to show how they really affect immediately the chart or even not. And also, we as House of Frenchies already used our first PDO pool successfully and raised some liquidity for us, because we are a project which was stealth launch, like a fair launch. We really had no VCs, no pre-sales, and we wanted to have really some different kind of setup compared to all the other projects. And our idea is really to have everyone here, and that's also the idea of House of Frenchies, that really everyone can join it. And also we want to use state-of-the-art technology in crypto, and not only on the meme tools level, but also on the DeFi level. And knowing you guys gives us also the opportunity now not to use the funds that we already gathered or taking something out of the liquidity to harm the project. So really use post-tax offerings to make all the developments that we need possible with the funds we can raise now.
Yeah, perfect. You guys have been creative with the PDOs you have launched so far. So we'll let Yoda kind of go into really maybe a high-level introduction of PDO and what is the overall benefit of PDO for investors first.
Yeah,
great. So let's first try by give a highlight to everybody what's going on. I mean, why even this kind of solution exists from the first place? What is the need, right? So everybody familiar with traditional industry, right? Like the startup industry. So when you have a crypto project that going live, it's very reminding like the startup industry, because they're both baby project that both try to make it. But you cannot forget that in the startup industry, 98% of the entire startup fails and die. And usually they die because of something called the valley of death, which means they cannot continue to raise money to keep the light on. And in the startup world, the way that it works is that project raising, a seed run, maybe a second seed run, maybe a pre-A, then an A, and then you have the alpha beta as much as he can go. And they're still failing, right? Now, in the crypto world, it's even tougher, because when project going live and is doing a pre-seed round, basically after the pre-seed, the token go to the market. Right, it's like a pre-launch. After the launch, the project goes to the market, and the tokens start to fluctuate it because it's trading on decentralized or centralized exchanges. And what that means is that the project cannot come after a few months and say, "Hey, our token was 10 cents. Let's do another round with 50% discount." The moment that the project will say that, the price will drop back by 50% because people will start to drop it, right? Project cannot take the team token or treasury token and dump into the market to raise fund because maybe the project doesn't have yet a strong buy pressure to support such kind of a dumping, right? So that dumping can kill the project, right? Obviously, the project cannot go to wherever there is liquidity, like Uniswap or PancakeSwap, and dry out, like rug pulling that money out, right? So in other words, projects have an issue. And not only that issue, there is a bigger issue because in 2017, project used to raise a lot of money, like $100 million plus based on napkin white paper. And then in 2019, they used to raise only tens of millions, but based on prototype, no longer napkin. In 2021, they no longer raise tens of millions, they raise millions, but based on alpha or beta with some kind of a prototype and community, right? And probably in 2023, investor will come and say, I only give you a few $100,000, but I want to see traction. I want to see income. I want to see people, using your tool. So as you can see, the industry is shifting from craziness to be more and more look like startup, and the demand, how much to pay from investor going down. I mean, not the demand, the willing, how much to pay to invest is going down like startup. But like I said, project cannot do another one and another one, so you really have an issue. What everybody is doing to combat that issue, and it's a big no-no, but still everybody is doing it, they're taking the treasury token, they're taking the team token, they're taking whatever tokens they have available.
Right?
Yeah, and what they do, they're offering for the users staking program. Everybody doing staking program. Every project out there doing staking program. And let's face it, what is the staking program? Staking program is go to your user and say to them, please don't be dumper today. If you can wait 6 months, 12 months to be dumper then, I will give you more free tokens so you can be better dumper, right?
Yeah,
I will
like
give you more ammo.
uneditable.
Yeah, exactly. You give more ammo for people to shoot you down faster down the road, right? So you just kick the can down the road. Now, I don't know if you know, but that kind of a solution, it's kind of like the phrase when you find yourself in a hole, stop digging, right? And the problem is that people basically doesn't have, project that doesn't really have a solution today, what to do. That's why everybody is doing the same. Now, what is the PDO? The PDO is coming to solve those issues that I mentioned right now. It's coming, first, it's not designed for initial offering, it's designed for post offering, which means first it exists for existing project. If you're a brand new project, never been launched before, first you need to launch, you need to be in the market. Now, the moment that you're in the market, doesn't matter, 1 day, 1 hour, 10 months, 10 years, it doesn't matter how much liquidity you have, then you can qualify to the PDO. And the PDO designed to be alternative, like a staking model, because staking model doing nothing. It's not increasing the value of the token. It's not increasing the liquidity. It's actually just increasing the amount of potential dumper and how fast the dumping will take place down the road, right? And we
Like
build
inflation taking place.
Right. So we build a new way how project can basically create a new type of staking model. And I will show in a second how it works. I will share my screen. And not only that this is alternative to staking model, it's also by doing that staking model, alternative staking model, it's also allowed the project to continue to raise fund. But unlike the initial offering, when you raise a lot of money at once, here the model is different. You're raising as you go. So for example, instead of raising $1 million at once or $1 billion at once, basically from every dollar that people can stack, you can say 80% will go to the liquidity, 20% will go to the team to keep the light on, right? Or 90-10 or 70-30. And if you have a strong liquidity, you can even increase the percentage. So every project can choose whatever the heck you want. And people, the user, will feel comfortable or not comfortable based on the result of that. But the good thing about PDO is that project can change it. It can launch many PDO. It can continue launching PDO as long as it wanted. So it's not like initial offering that you launch it for 1 day, 1 hour, 1 week, and once it's done, it's done. With PDO, you can continue launching it, and you can even launching simultaneously few. And the reason for that is because PDO do not drive a price from the project idea, right? It's driving the price from the pool. It's not like the project will say, oh, my idea is that let's pick up this price or that price. No, the project cannot decide what's the price. The price coming in real time from the pool. So what that means, if the price in the pool is 10 cents, PDO is showing 10 cents. If it's going to 20, it's showing 20. If it's going to 5 cents, it's going 5 cents. So whatever the price in the market will be, the PDO is following, and therefore forever, basically the PDO can keep running because it's not above or below the market, is exactly the market. Now let me share my screen so we can all see what we're
ask you something here.
Yeah, go ahead.
Yeah, because I was thinking that actually PDO, especially in the field of meme tokens and also in crypto itself, gives a new dynamic which was never there before, because it gives the option that the project or the project team can really be actively interacting with the investors for different funds. They can say, okay, I make a PDO pool, and now we need funds for marketing or whatever kind of development. So maybe you have a governance council like we have, and then we say, okay, we need some kind of funds for this kind of development. So let us start this, so that really the community and outside people can really interact together. I have the feeling that the meme potential or the meme token and the interaction with the community can be really forged and be built up stronger by the PDOs, how they work. Do I see it right?
I think today there is no even, at least not one that I'm familiar with, there is no really good solution in the market that helping existing project, right? There is only those that are welcoming new project to the market, but once they launch, nobody care anymore. Now, look how many projects launched on 2017, how many survived through 19 during the bear market, how many launched on 19 and survived to 21, how many launched on 21 and may survive or not surviving to 2023. So it doesn't make sense that every time there is a bear market, which is supposed to be, the cycle, it's part of real estate, it's part of stock market. There is no reason it will not be part of crypto market. So every time you have a cycle, it doesn't make sense that project will not recover and will be dead, right, before the cycle is over. So obviously, a new solution or a first of its kind solution need to be introduced in order to help existing project to stay, because it's in the interest of everybody to continue the project, including the investor, the user, and the team himself. So this is, by the way, can you see my screen?
Yes.
All right. So the PDO running right now on the mainnet as a very soft launch. We haven't done hard launch. We will do a hard launch very soon. We will do AMA with Cointelegraph and announce the world about the PDO. So you are kind of, you and your team and your group and your community along other project that just join us. So you are kind of the first to utilize it. You can see here that basically it's starting by saying that it's PostDex offering for existing project, right? And I want to show you how it works, and then I will explain deeper and deeper why it so makes sense. And I will introduce few features that will completely show why that kind of a project can explode to be bigger than whatever anybody can think of. So the first thing, if you're a project and you have a load of tokens, or if you're a developer, or if you're an advisor, or even if you're an investor, a whale investor with tons of tokens, and you don't want to dump them in the market because you don't want to hurt the project, probably the PDO is a good solution. It's not solution just for project, it's a solution for anybody that wants to utilize it and you have a lot of tokens. So let's assume for a second that I want to open a PDO. And let me go to my testing token wallet. Let me pick some token to use. All right, let's take back. All right, so I will take the bakery. Let me get here their smart contract. Why am I putting cake? I don't want cake, I want back. Right, so okay, so this is a back project, probably you're familiar with them. And let's say I'm coming to the PDO and I want to open the PDO. So I'm putting the smart contract here. And then I'm choosing, okay, I have a lot of tokens. I want to basically sell them to my user, and I'll explain in a second why user will want to buy it. And I can use between Doge auction to fixed sell. Let's simplify that right now under fixed sell. And then I need to choose the DEX and the pool that I want basically to drive money to. Pay attention that PDO is not a DEX. It's a layer on top of any DEX in the world. And by the way, in a few days, it will be working with all the EVM. So projects from any EVM supported blockchain can come and basically utilize it. And you come over here, there will be a list of all the DEXs that you want. And if you have a new DEX that you have a pool over there, let's say some new DEX in Saudi Arabia that been opened this morning, you can come over here and you can add your new DEX and it will be appear as well. So PDO is not a DEX, it's a layer on top of DEX, and you choose your DEX because once money will be raised, if you want to send it to the pool, we need to ask you which pool do you want us to send it to. And also we're driving from the same pool the price of your token, right? So it's important for you to tell us which pool. And then you can decide how long you want the PDO to run. Let's say you want it to run for 1 year, 10 years, 1 day, whatever. Let's put here by the end of the month. So it's everybody can decide. And then you can choose how many token as a supply you want to add to the PDO. You can choose any amount because if you change your mind, you cannot add, but you can remove and open a new PDO. So you can withdraw token if you think it's too much. So here I have, let's say 19 packs. I will put here 19. And then you can either, you don't have to, you can, but I will explain soon why you don't have to and why it's still lucrative without it. But if you want, you can basically creating a built-in. So when somebody buying the token, it will have a built-in staking into it without going to buy it and then going to stake it. Well, it will be like one. So let's say your project is offering, I don't know, let's say 50% APY a year, right? So theoretically, instead of say 50% APY a year, you can even play with that. You can say, oh, I am offering 180% APY per 30 days, which is exactly the same, like, 50% like a year, right? And then you can decide if you want a dumper shell or not. We'll talk about it. If you want to burn the leftover token, if you want to apply KYC, if you want to limit how much user can invest, stuff like that, right? And eventually, once you will open your pool, you can decide what you want to do. You want to send 100% of the money to the pool. You want to send it to the dumper shield, which means basically allow to previous investor to engage with money. I will explain dumper shield soon. Or you want to cash out, or you want a hybrid, maybe third, or maybe 60-40 or whatever, right? So you can decide whatever you want. And let's deploy this PDO like that and see what we're getting, right? So once you're deploying the PDO, I'm reminding you that you can open another one and another one, or only one. It's very flexible to do any type of PDO simultaneously with different terms.
But
Yoda,
yeah. Question here again, Yoda. This means actually that everyone who has the token which they want to offer, they could open a PDO pool. It could be even an investor, exactly. For example, a whale investor who wants to maybe help the project or is negotiating with the team and want to be part of the bigger community, can open a PDO pool and can do his part as a community.
Exactly. And I will explain you what the rationale, what's the logic for someone to come to the PDO, because PDO basically hijacking the entire traffic from the DeFi DEX industry, right? So imagine how many billions of transactions take place on the industry on DEXs, and the PDO have the ability to hijack it. And I will explain you what that means. So you see here the back token. If I will go to PancakeSwap and I will go to do a swap and I will choose, let's say a back token, and let's say I want to buy it with stablecoin, right? So let's assume that I want to push $10,000 to buy back token from PancakeSwap, right? So obviously you can see here that I will get 25,430 back, right? Do you see that? That's the amount of token I will receive if I will go to PancakeSwap. But what's cool about the PDO is that when I will buy it, right, I will not going to have a slippage, right? I'm not going to buy from the pool. I'm basically buying directly, right? I'm buying directly the project themselves. So when I will spend money, I will basically going to spend only 0.24 cent on every project. Sorry, on every on every one. You can see here that's the price I'm paying here on the PancakeSwap, right? But if I will basically going to push $10,000, I will have to pay above. You see, I'm not paying 20, what was it, 24.9. I'm paying 25. So which means I'm losing to the slippage. Instead of having a token that costs 0.24 something, I'm paying for each token 0.254, right? So because of the slippage. Now, do you see here price impact 35%? So what that means is that theoretically, if I will push $10,000, the price of the token should increase by 35%, but it's never going to happen because front running attack bot, right? Bot going to attack that transaction and they're going to steal the $10,000, right? So not only that I, as a user, get less token because I'm buying it at 0.254, but also the community, the project do not enjoy from that appreciation of the token because of bot stealing the money because of the front running attack. And by coming to the PDO as a user, even if there is no APY, let's say some user basically some developer on your team, I want to sell this token, he can sell them without even APY, but without slippage, and that's enough to be lucrative for people to buy from the PDO from him and not going to basically lose to slippage and front running, right? So once you're buying the token from here, if basically the pool says, if the PDO says, hey, let's put the entire money to the pool. I think here you have a pool as an example, right? So here you have 100% go to the pool, right? So let's see what's going on. Let's see what's going on if I will invest in that pool. Let me open here. And by the way, pay attention that once you open a PDO, you don't put a logo, you don't put information, you don't put prices, everything been withdrawn automatically by sources that third party can trust, and they automatically been appear here, so nobody can manipulate nobody. So you can see here, this is your pool. In this pool, you have right now $28,000, you see, liquidity. And you see here, that's basically the price. Let's move it like that so we can see it even clear. You see, so that's the price right now, 0.002001, correct? So if I will go right now to the pool and I will put here, let's say I want to put $100. How much is a $100? All right, so let's put $100. Okay, so only $100, right? Look at the price. You see the price, right? Let's take a picture of this price. Let's put it. Let's put it in the chat so everybody can see the price before. Here we go. So that's the price, right, in the pool. So now I'm going and I'm investing as a user because I don't want slippage, and I'm going to buy from the pool. And I obviously want to enjoy from the APY that you're offering, which is 175 for 90 days, right? And then what will happen the moment that I will invest, what the PDO contract is doing is basically it's taking my money with the $100, and then it's going to the pool in real time, and it's basically buying from the pool. You see, boom, it's buying from the pool 50%, and the other 50 is basically using it in order to inject back in order to create liquidity, right? And by creating liquidity, the project receiving the LP token, not immediately, 30 days after the staking is over, so the project will not do any, rug pulling. So the point is that for the first time, I'm as a user, instead of go to PancakeSwap to buy, and believe me, every project that in the market, trade in the market, PancakeSwap, Uniswap, SushiSwap, whatever, right? Every day they have buy pressure and sell pressure. They have to have, otherwise the price will go like that or go like that, right? So every day they have sell pressure and buy pressure. Obviously, during a bear market, they have more sell than buy, and during bear market, the other way around. But every day you have to have both. So I told you, users are losing when they're engaging with DEXs, and the community is losing because of the bot that's stealing the money, right? The front running. So here, not only that the user getting more, same token directly from the project, and you can see what's happened to the price. You see, price increase. Now you can see the price before and after. You see, and so Not only that, as a user basically get more tokens, but the project get more liquidity, and the liquidity is sustainable, which means nobody putting as an ALP and tomorrow you will move to the next project in line. It's sustainable, it belongs to the project. So as long as the project have DAO base or is honest, that liquidity going to stay, right? So as you can see, it's benefit everybody, right? And it's better approach. And you can see here what's happened from only $100, right? Now imagine yourself people investing thousands of dollars every day, or tens of thousands of dollars, right? Or the daily trading is even hundreds of thousands. The price can go cuckoo, because if you will check how much people staking, you will see that people raising amount, doesn't matter what it is, 1 million, 500,000, 2 million, but the staking for project, because it's longer, usually the staking have much more volume than the initial offering industry. Initial industry is a baby compared to the staking industry, right? So imagine yourself that you're pouring the entire staking industry into that model. It's kind of look like to do initial offering again and again and again and again and again for perpetuity and benefit the liquidity and the user and the price. If that makes sense?
Yes, makes sense. But Yoda, I also want to say just like a little bit sum up. So it means, so if the House of Frenchies, or especially we are now offering a PDO pool, which goes to liquidity, and we are not offering an APY, this means still that all the investors get a benefit of not having a slippage, not being attacked by front-running bots.
Here it says there is APY, you see, 175.
Yeah, no, here we have APY, but I mean, even if you wouldn't have APY, so this would means it's still a very good deal for all investors.
Oh yeah, if you have a whale investor or someone that bought a lot of token on the ground floor and he doesn't want to sell them all, it's better to sell them from here, because user will buy it, benefit the slippage free, but it will not hurt the market. It will not basically dump on the market. So it's better approach for selling token, buying token. Now, do you see here something called secure future?
But just Yoda, before we go to secure futures, because it's very advanced, I would like to look on the other pool, because the other pool especially is at this very moment very important for us, because if you open the other pool on the left side, yes, this one, because there everything goes to the project. And here in this fund that we are raising for the project, this is actually that we are raising these funds especially for a big marketing campaign. But also we want to emphasize also everyone who wants to know PDO, but especially now also for all the House of Frenchies people, that every project, but here also we can look for a special kind of pool, and then we can see, okay, we need like 5,000 or 10,000 or what amount of dollars, and then we can use this, and then can really use the funds raised from this project pool, especially for marketing or what kind of development we need.
Gotcha. So yeah, so you can basically open any pools and offer any type of reward for the user, and then disclose to them where the money will go. Obviously, it still benefits the user to buy from here instead of buying directly from Dexes. So in other words, like I said before, the PDO is not creating new kind of needs, is doing piggybacking on existing need for the project, and user anyway going to buy from Dexes, so it gives them better solution to buy exactly the same token, but with better terms than Dexes, right?
Yes.
All right, so now here I want to introduce this feature called Secure Future. You see this one?
Yes.
All right, so this is a very important tool, and I want to explain to your community and to you why is it so important, because this one designed to support PDO especially during a bear market, because as you know, when you have a bear market and when project is not clear to the user if they want to invest or don't want to invest, usually people standing on the bench, they do not invest, right? That's what everybody's doing when they're not solid or bullish, right? So what people do when they are not bullish to invest? The answer, or the majority answer for that question, is that most likely people do not sell the token to fiat money and put it in their bank account. Usually they take the token, if it's native token or stable coin, and they're staking it on some protocol like HOFR and Curve and Venus or combine it, right? They try to generate as much as possible APY, but with as lowest risk during a bear market as possible as well, right? Now, what if you had a reality that you can still do that. You can still go to Venus and Combine and all those players that you favorite and do exactly what you wanted to do. But by doing it, instead of just staking and that's it, what if you can keep a lottery ticket? What if you can keep an option that if you made a mistake and some project that you want to invest in it boomed, and now it's too late for you, what if you can go back in time and basically change your mind, and instead of staking, basically investing in that project? And this is what the secure future is all about. It's basically it's blowing mind because it's based on quantum finance model, and it's very unique model. It's basically say to the user, listen, do you want simultaneously to invest and not to invest, and decide later which one you choose to pick up, right? Simultaneously. So what that means, instead of the user to go and push $10,000 to the pool and immediately it will bump the price, immediately liquidity will credit, immediately tokens will be distributed to the user. Imagine to yourself that the user come over here, I'll put a small amount just for example, and let's say it's pushing here the $10,000 to the secure future. What's really going to happen when somebody is investing the money from here and not directly to the PDO pad, right? What will happen is that his money is not going to inject to the PDO. Instead, it's going to inject to, let's say, Combine it or Venus, depending on the network, the blockchain that here I think we are Binance Smart Chain, so it's go to Venus, right? So what that means is that the money that someone investing go to Venus with the same terms that you will receive like you go to Venus directly, exactly the same, not even 1 cent less, right? And I will show you in a second that it go to Venus, right? And then what will happen, imagine to yourself that the PDO is running for 30 days or 1 year, right? Here we go, you see, I push the money, it said to me, I'm pending. And I will come over here and I will show you where the money went, okay? You see here? So let's see, where's the money? All right, you see where's the money?
It's in Venus.
Right. So I basically right now push money to Venus, right? Exactly like go directly to Venus. And then what will happen is that imagine that after 1 year, this project that starts from 3 zeros and 2, let's say you remove the 0. Let's say it become to be 0.02. Originally,
let's say we become 0.1. That's more realistic for us.
Even if it become to be a door, it doesn't matter. The point is that if the project will boom and will do 10x, 100x, 1000x, users may feel that they missed the trend, right? Users that used to really stake in Venus will feel that, oh, I missed the trend. This project already done 100x or 1000x. Doesn't make sense for me now to come in and invest because probably I already lost it, right? It's better for me to go and find something else, right? But because of the secure future, that user doesn't have to have that position. It can have different position. It can have multiple positions. It can say, you know what? The project increased by 100x, right? And I want to give up on my whatever. Let's say I generate $10,000, I said, right? So let's say 10% I will generate APY from Venus, right? Let's say average 10%. So users say, you know what? I don't want to claim the Venus and walk away. I want to claim this reward, this APY. So basically by doing it, what will happen, the user will say, the investment that I did in APY, I don't want it. Take that $1,000. Instead, the tokens that you originally promised me, right? The 175% APY and everything, all those tokens, I want them now, even though the price already jumped by 1000x. And just to be clear, to show you, because usually it's working best when I'm showing it on Excel, just to clarify that, I want to quickly jump on Excel to show you why it so makes sense, right? So this is you 002, correct?
Yeah.
Right. And let's say user come today, invest $10,000, right? In the PDO. We already established that when you buy directly from the PDO, there is no slippage, correct? So if you buy directly, you will get 5 million tokens, correct? Now, let's assume, for example, that you're offering 100% APY for a year. So if someone investing basically for 1 year, right? It's clear to everybody that after 1 year, the user should engage with 10 million tokens, right? Very clear. Now, let's see what's happened using secure future. In secure future, we say the user is not going to invest right now. We say it's going to Venus, correct? So let's say Venus give you 10%, and you put the $10,000 in Venus. Here we go, 10%. Okay. Now the question is, that's your reward from Venus, right? The question, what will happen? Let's say this project doing, right, 100x, right, and it become to be 0.02. What user will decide down the road, right? I will show you. If it will come over here and it will push the $10,000 down the road to buy, it will need to basically buy at the market price, which means that's the market.
Yeah.
There is no way around it. So not only that you will buy the market and increase the price above the market, but you can see here that you're getting only $50,000, but a year ago you secured 5 million tokens. You see, those tokens was secured from the beginning. So in other words, if you will decide to give up on Venus reward and pick up basically the 5 million tokens that is secured a year ago, we're talking about $1 million value that the user should pick up. I don't know how many people will decide to give away $1 million for 1,000, right? Even if the token will decrease by 2, right? Let's say it's crashing by 2, which can happen. Even then, it makes sense to pick up the project and invest back, down the road, depending money, instead of go to Venus, right? Even if the project will go and lose 90% of its value, right? It still makes sense to invest in the project because probably it's the rock bottom. Probably it's the right way and the time to pick up those tokens. So as you can see here, basically what we build is kind of another hijacking. We say to people, you're about to go to Venus, and you know how much money go to Venus and Compound and Earth Finance and all those places, right? Billions, right? You're about to go to those places. You're about to put your money over there to stake with low risk. Fine, do that. But don't you want to keep up holding some kind of a ticket on potential blue chip or potential project that can do 100x or 1000x. And if you change your mind, no problem. All you need to do is cancel. You say no thank you to the APY and you get directly your money from Venus with whatever it's generate. But if you will see that it's a right decision, you can see the future first and then decide later. So it doesn't make sense that someone will invest in Venus on Compound or all those protocols and give away a potential ticket. Why do you want? Keep the ticket. Maybe that ticket will be a home run, lottery ticket that can change your life. So that's why it makes sense that we will be able to hijack transaction of staking by allow people to basically holding two positions, investing like in Compound or Venus, but on the same time holding a lottery ticket on their favorite project, right? And here there is something also interesting. Over the time, you will see here how much money been pending. Let's say $10 million pending or $1 million pending, right? People will start to speculate. They're going to say, oh, it doesn't make sense that the entire $1 million will be invested or the entire $1 million will be canceled, right? Probably there will be some kind of statistic. Maybe over the time, there will be statistic for the entire model, right? And by speculating, they're going to create some kind of a FOMO to themselves. Because imagine to yourself that theoretically, 50% will be canceled, 50% will be invested, right? If 50%, $500,000 will be invested, the price, and we will display here, by the way, very soon, how much the potential price of the token will be based on the pending, right? What will happen, the price will jump. We will show how much it can jump. That can cause a FOMO. If you have 100 people pending, one of them will say, you know what? I know that some of them are going to invest and some have not. I want to be the first to invest because if my money pushed to the PDO, the price of the PDO is increasing. So the next guy in line doesn't have my price anymore. Now we have the market. So instead of have race to the bottom, you have race to the top, right? It's a different approach. Maybe someone will go directly to PancakeSwap and buy from the PancakeSwap even before all that money will be injected because it want to try to capture the price on the ground floor, like doing, instead of bot, doing a human being front running, right? So you can see that during even a bear market, that kind of a model can hijacking transaction from staking model and creating a FOMO to the project. If that makes sense?
Yes, and also I think I also want to pinpoint, if I understood correct, you can also correct me, Yoda, that also this kind of model or the secure future is also like a best offer for especially young project, which very likely have a high risk to reward ratio, like especially young projects like ours. So if you think, maybe it's a little bit too dangerous, I don't want to go full all out, you can use a secure future function. And then later you see, okay, the project is really jumping like crazy. And then you say, okay, I don't want my Venus rewards. I go full project.
Your community member can come and put here on secure future, they can come and put, let's say 10,000 or 100,000 or whatever they want, or 1,000. And they can say, you know what? Let me see how much your token increasing. Let me see how much liquidity you have. If I feel comfortable that I made the right decision, I can go back in time and pick up that offer. If not, I will stay with Combine and Finance and then. So they don't have a risk basically by securing potential reward.
So we don't need to make the community trust us. We can really give them an option which saves the investor, and then they can decide what they want to do. I think this is an amazing tool, and whenever I hear your explanations, I'm amazed. That really was what crypto was looking and seeking for the last years.
So let's talk about another solution that is really great to users and projects. As you know, a lot of projects that coming into the market and they're doing discount token or pre-sale token and all those tokens that they're not full price, usually they are offering kind of a vesting model to their investor or community or airdrop, right? And the problem with the vesting model today in the market is that it's creating a race to the bottom, because it's like the game theory, you know, the prison dilemma. People going to say, okay, I have 12 months lockup, or I have 6 months lockup, or 90 days lockup. And then people start to ask themselves, should I hold, hoping that everybody else will hop in because then the project will boom? Or should I don't trust anybody else, and I think they're thinking what I think that they're thinking, and they will dump on me, so maybe I should be faster and dump on them, right? So that's kind of a dilemma that everybody is facing, even if it doesn't want to be a dumper. Basically is bidding himself with the dilemma, and it's causing him to be a dumper. And then the moment that the vesting is over, you see rushing into the bottom, people dumping as fast as they can, right? And the point is that we
can also say that PDO makes people more ethical investors at the same time.
No, actually not. It's I don't believe in ethic stuff. I think you need to build stuff that they're completely decentralized and benefit everybody. I don't believe in zero-sum game, you know, one lose, one win. I believe in tech and technology that can create a win-win game. Win-win game meaning that nobody gets hurt, but nobody gets limited. So for example, I don't believe that investors that invest in you or in my investor should be limited by vesting. I mean, they're the first to put the check. Why do I need to limit them? Why do I need to hurt them, right? That being said, because they're the first to get the check, why do they need to hurt the project down the road? It doesn't make sense either, right? So there is kind of a two sides that I need to take care of. And until today, there was a conflict between those sides, right? And now I will show you a solution that is basically do not have a conflict. Again, it's based on quantum finance model. So it's basically give to the investor and the project more than two positions, dump, no dump. So we're adding more position, multiple position to the equation. So I will give you an example. We created technology that's called Dumper Shield. Let me share that screen so you can see. So we created a technology called Dumper Shield. And what the Dumper Shield actually do is allow to the project to basically tell to the user when you're finishing the staking, instead of call the token to your wallet, go and call it to let me to here. Can you see Dumper Shield?
Yes, I can see your screen.
Right.
And it looks again.
So basically it said to the user, instead of basically call the token to the wallet, call them into the Dumper Shield. So the Dumper Shield is basically a vault. Everybody have vault, and your private wallet is the key for your vault. So you don't need any private key. Your wallet is the private key. And then when you come into the vault, it will show you how many tokens you have, right? So you will come over here, and you will be able to see all your Dumper Shield tokens, and you will be able to see how many of them already vested or how many of them are still under vesting. The good thing is that why it's not going? Here we go. So the good thing is that the Dumper Shield is not regular vesting. It's not period of time once it's over, everybody rushing out. It's basically a new approach that during the vesting time, it's allowed to the user to engage with liquidity So hopefully when the vesting is over, there will be by far less sell pressure, or maybe not sell pressure at all. And how that takes place? There is two incredible features that allow them. One is decentralized OTC, which means everybody can come and basically offer his token to Joe Schmo as much as he like, but he doesn't need to list it every time. He can ask a fixed price, or he can go by the market and say every time the token go to with the market, I want 5% below, 10% above. So whatever the token will do in the market, it will be always follow. And user can offering as many tokens that he like. He doesn't even need to know who is the buyer. Buyer can come and buy a fraction of that, and the leftover will be left on listing to the next buyer, right? So everybody can come over here and buy as much as they want, right? Now, that's decentralized OTC. But the most powerful tool that we have, it's not yet open, but it will be open soon, is basically called the gateway, right? So you will see it here. That's the gateway. And what does the gateway mean? The gateway means that you will allow to users to basically sell the token indirectly to DEXs and SEXs in the market indirectly. And how that takes place, how it works. So imagine yourself that me and you bought a token, and me and you want to sell 1 million of our token, right? So there is big inventory. And let's say the price in the market is $1. So I want to sell 1 million, you want to sell 1 million, right? 2 million. So first, the gateway will do pro rata for every money that's coming in. So we're both going to benefit from that. And second, we are not choosing what's the face value, like in the OTC, decentralized OTC. Here, it's going by the market. So we cannot choose the price. We cannot say, I want to sell for 0.5 cent or $1.50, right? It's go by the market.
Yoda, just a question. Can you once repeat? Sorry to interrupt you, my dear. Can you once repeat this? I didn't understand it with the price.
So the gateway basically allow me and you to sell token. And all we need to do is decide how many tokens we want to sell. Let's say I want to sell double token than you, right? So the gateway, when he's selling it, it will split the proceed between me and you pro rata, right? Okay. So it will be fair. That being said, me and you cannot decide what's the price in the gateway will be, what the price of the token. We cannot say, oh, the price in the market is $1, we want $1.50, or we want $0.50. We cannot decide it because the gateway selling at the market price, right? So the only thing that me and you can do, we can vote here because me and you are the only holder. So we are the DAO. We can vote how much discount we want to give to whoever will buy from the gateway our token. So let's say me and you decided that 10% is fair and square, right? It's good enough for someone to buy our token. So we're offering our token 90 cents on the door. And let's say Kyle is basically a guy that wants to provide liquidity to me and you. So he's coming to the gateway, he's depositing 90 cents, let's say with stablecoin, and it's taking our token and it go to PancakeSwap and sell it on the PancakeSwap for whatever you want, 90, 91, 92, $1, whatever, right? So theoretically, if Kyle cannot sell that token, he can return to the gateway, return the token and get his USDT back. You have 24 hours to do it. So first, there is no risk for Kyle or anybody else to basically drive liquidity to me and you, because all you need to do is deposit money, try to sell it, and then if you cannot sell it, you return and get the money back. So for him, no kind of a risk. But the gateway is not allow me and you to sell zillion babillion token if we want to. The gateway is very smart. It's basically monitoring the token price in the market, and it's checking how much the token appreciate versus yesterday. Let's say the market yesterday was $1, and now it's appreciate to $1.10, right? 10%, right? So the gateway will allow me and you to sell as many as we like, but it will not let Kyle to buy as many as he wants. It will tell to Kyle, you can buy out of this inventory only 0.5%, or only 1.5%, or only 10%. Why? Because the gateway is calculating how many tokens Kyle can buy, and if he will dump them on the market, it can only drop the price in the market 50% below yesterday appreciation, which means the maximum that the gateway will let Kyle to damage the project token value will be from $1.10 to $1.05. In other words, instead of dumping token and go below and again below and again below until the token crash, basically every day when there is appreciation, the gateway allowed to people to drive liquidity to the gateway, to the user that they're under vesting, right? but they're only hurting a little bit from the appreciation. They're not dumping the price. They're basically every day, instead of doing 10%, you will do a little bit less. You'll do 5%. So every day you have crumbs, right, that you're driving into the liquidity. And by doing it, maybe by the end of the year or by the end of the month or by the end of whatever the vesting period time is, maybe there will be no need to people to rush to the bottom because maybe they're already engaged with liquidity. You know, maybe the price already pumped so hard because there was no hard dumping during that year that they don't want even to sell. They want to buy tokens because they want more tokens, right? And if you think about it, the dumper shield is not really vesting, traditional vesting, because the user that in the dumper shield can vote to release themselves from the dumper shield at any second. You can say as a project, the dumper shield for 12 months. They can vote, no, we want 1 hour. They can do that. They can release themselves from the dumper shield. But it doesn't make sense because if there is a big investors and there is small investor will have an interest to vote 1 hour, but big investor doesn't want to go to the market with small investor that will dump immediately and they have a big bag. They will not be able to dump. So the price will crash and they will be the big loser. So they will probably going to vote to stay in the dumper shield and engage with liquidity during the dumper shield in a fair and square pro rata rate, right? So everybody will engage with liquidity without hurting anyone, not the project, not the token, and not other investors. So it's not really traditional investing. It's basically approach that allow you to, during the vesting time, to engage with liquidity, hopefully that when the vesting is over, there will not be sell pressure anymore. If that makes sense?
It makes sense. It also gives the investor the opportunity, maybe it's not so obvious, but also to give like the most optimal dollar cost average pricing, because whenever you have appreciation, the gateway sells a little bit, and whenever you again appreciation, it sells a little bit. So it's like it's giving you the opportunity over your vesting period to get a dollar cost average best price. So that's actually an amazing tool.
So not only that, the gateway, by the way, the dumper shield, by the way, just to, without try to expand it too much and confusing people, but the dumper shield have 2 positions, first position and second position. So if you will ever going to do airdrop, which means give token for free for people, and you send them to the dumper shield, you can place them under second position, which means the investor that actually bought the token will engage with liquidity first from the gateway. And only after they will not be on the dumper shield or they will not going to sell token, the leftover of the liquidity will go to those that didn't pay anything for the token. So you're basically creating 2 types of classes, those that paid and those that receive for free as promotion, because they're not really equal. Because those that got something for free, they have nothing to lose. They don't have skin in the game. So if they will dump, they will hurt the user that basically bought in, right, with real money. So by creating 2 positions, 2 classes, you basically can send one class to be first position, the other class to be second position.
Thanks a lot, Yoda. Also, maybe to not get too much because into the very technical details, because it's amazing, but it can be a bit overwhelming for the community. I have a little bit more easy question because it's, I think, also important. I mean, there is the tool called liquidity protection. And I think the liquidity protection is something very important for investors to understand, that actually, even if they invest via a pool and maybe they are scared, okay, my pool will be drained or whatever, or people will take out something, but this small detail of liquidity protection gives another protection for the investor. Can you please elaborate on this?
So when somebody is investing in the PDO, and in that case, you can see here that 100% of the money go to the pool, right?
Yes.
So what's happening is that first, the project do not get the tokens, sorry, not the token, it doesn't get the LP tokens immediately. You get them 30 days after the staking is over in order to prevent from the project to do front running. Now, you see here in this project, right, in this PDO, the project taking 100% cash out, right?
Yes.
So when you're doing a cash out, I will show you here, you have basically some kind of limitation how much cash out you can take. So the PDO said to you, listen, if you have $1 million liquidity in the pool, you can do cash out up to $500,000. And if you have $100,000, you can do cash out up to $50,000. So the PDO always allow the project to do cash out no more than 2-to-1 ratio, because you don't want to do cash out and people invest, and after 3 months, 6 months, whatever staking, they will come to the pool and there is no liquidity, right? We need to protect those users as well. So here, when somebody is launching a PDO, you basically say to him, do you want to limit how much money you want to take out based on how much money liquidity in the pool? And then your PDO will be freeze, will stop or pause. Or do you want to keep doing PDO, but from every dollar that's coming in, we have to take 66% to the pool, and then the other 33% will come to the project team, right? So for example, here you can see that even though it says 100% go to the project, right? If there is not enough liquidity in the pool, from every dollar that will come in, the project will send, the PDO will send 66% to the liquidity to increase it, and then it will give 33% to the project. So it's always kind of try to satisfy all masters, right? The project needs, the team needs, the user needs, the community needs. So we try to build something that there is no lose-win. There is basically collaboration and some kind of symbiosis between everybody.
Yeah, that's correct. Yeah, thanks a lot, Yoda. I think with this very positive ending, like collaboration and working together as a community, I think we can wrap it up here, because I mean, after your explanations and also ourselves presenting as a very community-driven project, I think it's also now obvious that even the community members itself can use the PDO pools, or also can you talk to the project team itself and say, hey guys, I see we have a special need for our project. Why you don't go to the PDO pools? Maybe I know them. And then tell them, hey, make a PDO pool, but let us use this for the liquidity, or let us use this for the project, and then can really ask something special. And then the project team can react to it. So I think the PDO pool itself is a great tool for projects, investors, and also to keep the spirit of crypto living, that really everyone can join it and can work together. So I think we all need to thank you guys for this great tool and for this great project.
Sure thing.
Yeah, and one thing I want to touch on real quick is, since we did run a D-voucher campaign, when Yoda was explaining the dumper shield and we were talking about different levels. So D-voucher is able to provide that second level access to any tokens in the quantum ecosystem. I know Frenchies, I think they added some reward to that campaign as well. So we will run the randomization to see who wins and gets the Frenchies reward. And we'll distribute D-vouchers. Yoda, do we have a timeline on when we'll distribute D-vouchers or allow them to be claimed?
Yeah, so it's a matter of a few days. It's already under testing, so in a few days, people will be able to come to a page that will look like that. And once they will connect the wallet, sorry, not this wallet, MetaMask wallet, they will be able to see how much money they have. They will be able to claim it, and right on the spot, it will create an NFT, basically D-voucher tokens that later on will be able to convert based on the value to different project on token and get basically sold and transfer and everything.
Okay, and since IBO has been added to the tokenomics recently, we have a question regarding IBO. And I don't want to keep you too long on this, but can you go over IBO on how that would work for PDO within the tokenomics very quickly?
Not much, because I need to drop off, but I have another AMA. But if you can explain that, I mean, the IBO is a new approach in general that allow people to invest money in the pool, but without the risk involved. So you can explain that more, and I have to jump off.
All right, Crypto T will be able to provide you documents on IBO to allow you to look in a little deeper. And Crypto Boy, anything before we head off here?
I want to thanks again everyone, especially Yoda and Yukel and the whole community to be here. And I hope that everyone who is still not invested in House of Frenchies and also PDO takes the time, goes and buys some in the pools. to help us and also PDO.
Thank you.
Yeah, thank you.
All right. Great call, everyone.
Take care. Nice to meet you all.
Yep. Thanks. Bye-bye.
Bye.